Welcome to the Explainer. All right, the holiday season is basically here, which means all eyes are on the big retailers, especially Target. Today, we're going to break down their latest Q3 earnings report. And why should you care? Because it's not just about their bottom line. It tells us a ton about how we're all shopping right now. So let's get right into it. A report like this, it's way more than just a bunch of numbers on a page. Think of it as a snapshot, a real-time look at how we, the consumers, are actually feeling and, what we're spending our money on. This quote here from Target's new CEO really sums it all up. They basically hit their targets, but he's also saying, hey, it wasn't easy. It was a tough environment. So what exactly were those multiple challenges he's talking about? Let's dig in. All right, first up, let's look at the big headline numbers. This is where you can really start to see that shoppers are, well, feeling the pinch. Okay, so total sales hit $25.3 billion, which sounds like a ton of money, right? But it's actually down 1.5% from last year. Now, to put that in perspective, for every $100 you spent at Target last year, this year it was more like $98.50. Doesn't sound like a huge drop, but when you're talking about a company the size of Target, trust me, that adds up to a lot of money. Okay, so to really get a sense of how a retailer is doing, Wall Street loves this metric called comparable sales. What is that? Well, it basically ignores any brand new stores and just looks at the ones that have been open for a while. It's the best way to get a true apples-to-apples look at how the core business is performing. And well, Target's comps, as they call them, were down 2.7%. That number is a big deal. It tells you that even in their bread-and-butter established stores, people are buying less. This is really where you see that consumer pullback we were talking about. Shoppers are just not filling their carts like they used to. So why the drop? What's going on here? Well, it's kind of a double whammy. First, fewer people are walking through the doors. That's customer traffic, down 2.2%. And second, the people who are shopping are spending a little bit less each time. So yeah, fewer trips and smaller carts. That's the combo that hurts. Okay, so here's the corporate speak for why. They call it softness across the broader discretionary portfolio. Phew. What that actually means in plain English is that we're all cutting back on the fun stuff, the non-essentials. Things like new clothes, home decor, accessories, the wants versus the needs. When money's tight, that's the first stuff to go, and you can see it clear as day in Target's numbers. But hey, it's not all bad news, not by a long shot. Let's pivot and look at the bright spots, because there were definitely some areas where Target is actually crushing it. And this tells us a lot about where they're headed. So check this out. Even while foot traffic in stores was down, their online sales were up 2.4%. That's a really good sign. It shows that their big push into digital is really starting to pay off, even when people are generally spending less. And what's driving that online growth? Here's the kicker. A more than 35% jump in their same-day delivery services. That is huge. It just goes to show you what we all value right now. Convenience, speed, and ease. We want our stuff, and we want it now. This chart right here, it perfectly tells the story of how we're shopping today. You can see sales for things like apparel and home goods are down. That's the discretionary stuff we talked about. But look at what's up. Food and beverage, of course, and also what Target calls hard lines or Fun 101. Think toys, electronics. Basically, the essentials plus those small, affordable treats are what's still making it into our shopping carts. And here's something you might not even think about. Target is becoming way more than just a store. They have this whole other side to their business, and it's absolutely booming. We're talking about things like their advertising platform called Roundall, plus memberships and sales from other sellers on their site. That part of the business grew by almost 18%. They're building up these really powerful new ways to make money. Okay, so with all that as the backdrop, how is Target planning to tackle the holidays? I mean, this is the Super Bowl for retail. They have a very clear playbook, and it's all about winning over a very cautious shopper. The first part of the plan? Newness, and lots of it. Target is betting that if they offer a ton of fresh, exclusive stuff, it'll create that treasure hunt feeling and get people excited to come in. How much new stuff? Over 20,000 new items. That's double what they had last year. Wow. And second, and this is probably the most important part of the playbook, they are hammering the idea of value. But look, it's not just some fuzzy marketing slogan. They're getting super specific. We're talking a full Thanksgiving meal for 4 people for under $20. Thousands of gifts starting at just $5. This is a direct answer to everyone's budget worries. So what about after the holidays? What's the long-term vision? Well, the new CEO also laid out his big picture plan to get Target back on a steady growth track. It really comes down to these three big priorities. First, solidifying merchandising authority. That just means getting the right products on the shelves that people actually want to buy. Second, making the shopping experience, whether you're in the store or on your phone, just better. And third, using tech to make everything run smoother and more efficiently. And looking ahead, they're being pretty upfront and realistic. They're basically telling Wall Street, hey, don't expect a miracle overnight. They're predicting that sales will still be a little weak through the holidays. The message is clear. This is a long-term plan, a marathon, not a sprint.
So there you have it. Target has a clear plan. They're trying to walk this tightrope, offering exciting new products while also screaming value from the rooftops. But at the end of the day, the real judges are all of us. The big multi-billion-dollar question is, will it work? Will we actually fill up those red carts this holiday season?